Good morning, students. Let's start with today's topic macroeconomics and national income. In national income, we have started today factor cost and market price. So, in this portion, in the national income, we just calculate GDP. GDP means gross domestic product. Gross domestic product. And if we convert it, if we give in MP at market price, and we just converted GDP at FC, that is in factor cost. So first start with the topic of market price and factor cost. Market price is the price where the more than things are included, like subsidies and taxes. What kind of taxes? All type of indirect taxes are included in this market price. Market price is the price when the producer sell their product in the market, and the factor cost. The factor cost is the cost where the taxation and the subsidies are not included in this GDP. So we just always calculate the factor cost, because the taxation and the subsidies are reduces in the already for the GDP concept, because in the method of calculating of national income we already subtracted the income method and the different form of method. So in this portion we just calculate GDP at FC and NDP FC, NNP FC and NDP FC, and all are in the factor cost. In the different portion, GDP at MP, GNP at MP, NDP at MP and NNP at MP. So what's the major difference between this and this? If you want to convert the GDP FC to GDP MP, then we just subtract or add it in the form what? If we move MP to FC, we subtract NIT. What is the mean of NIT? NIT means net indirect tax, and it is can be calculated by the indirect tax minus subsidy. So what the important of this MP and FC? We just always calculate for the national income in FC, because the indirect tax already deducted and it is a part of the government income, and if we add it in the national income, then it is double counted method. So we just not added this indirect taxes in the particular of national income. Let us start with the different form in this. Gross and net. If we calculate the national income in the gross form and net form, which is different in the form of this. Firstly, if we want to move from gross to net, so we just subtract depreciation from net to gross to net. If we want to move net to, so we just add up the depreciation in this form. So that is the second conversion. What is the mean of depreciation? Depreciation is the cost where the reduce the cost of the fixed assets and another form of assets. All the assets can be reduced in the form. Then the difference between the this gross and net, we just always calculate in the form of net, and sometimes we just calculate in the gross form. Next we have net factor income from abroad. How can we calculate it and why we need it? So net factor NFIA, short form is calculated by the factor income from abroad minus factor income to abroad. Why we need to calculate NFIA? That is a majorly form. Because if we want to calculate the domestic and national income, so we convert domestic income to national form. To national form. Then we just add up and subtract the NFIA. If we move domestic to national income, I just explain again. Domestic to national. Domestic to national, then we add NFIA. Net factor income from abroad. What is the mean of it? So much Indian and a local person, normal resident who live in the foreign country, the capital the income should be added in the national income. So we just add the NFIA in domestic income, then we calculate the national income, and we want to move from national to domestic, national income to domestic, then we subtract NFIA. So there is three majorly form that we read today. First, MP to FC and FC to MP. Second, gross to net and net to gross. And in third form, domestic to national and national to domestic. So in this all form, MP, market price to factor cost. If we want to move from market price to factor cost, then we subtract depreciation. And we want to move factor cost to market price, then we add depreciation. If we want to move sorry, move NIT, sorry, NIT. Here is depreciation. And this last NFIA plus NFIA and subtract NFIA. So MP to FC, subtract NIT, net indirect taxes, FC to MP plus NIT and net indirect taxes, gross to net. If we want to move a gross domestic product, gross national product to net national product, net domestic product, so then we subtract depreciation, and we want to move from that net to gross, then we add the depreciation in it. Domestic income, domestic to national, we just add NFIA in net factor income from abroad, and we want to move national income to domestic income, then we subtract the NFIA. Isn't it? Is this